The reality is that China's economy is going to grow north of 5% this year. Some of that will obviously be the benefit of base effects from a very poor 2022. But we are seeing an improvement in growth. I think what has been underwhelming is that it hasn't been the kind of gangbuster economic recovery that we've seen in previous business cycles. Now, part of that is by design. They haven't dumped liquidity into the system or into the real estate market the way they have in the past, so it has been more measured. I do think there are some headwinds that they are facing. The very high levels of unemployment among recent university graduates is one. Change in consumer spending patterns is another, and that's keeping inflation down. So I'm not convinced that it leaves them economically vulnerable, but I do think it changes the dynamic a little bit in terms of economic spillover for the region.
Right, but in that respect, because, you know, a lot of the, I suppose, expectation was, you know, and you rightly mentioned, especially when you consider the lapping effects, that it's very likely that we do see plus 5% growth coming out of China. But because the consumer recovery hasn't been what was expected, and potentially you could make the argument not even close, without some form of consistent targeted stimulus, how does that turn around? Because I would imagine that in so much as you can try to, you know, lift confidence by having some property measures, having some EV measures and everything else, if you're, generally speaking, SME in China, if you have anything to do with trade and you see the deteriorating macro in the US, you know, the inventories are as such that they don't necessarily want to buy more from China. You've got what's happening in Europe right now. What do you really have to be confident about?
Well, look, let's not overstate the weakness in trade. I mean, China is running a record trade surplus this year. Now, over the last 6 weeks, we've seen some deterioration in exports. The import statistics are a little soft as well, although those are exaggerated by a decline in commodity prices. But I think we have to remember that overall, China's net trade position is still quite positive. And while trade with the US and Europe may be a bit softer, China's trade with other parts of the world, whether it's Southeast Asia, the Middle East, etc., is actually extremely robust. So I take your point. There are some signs of softness, but I don't think we need to be very careful also not to overstate that.
To that extent, do you think this is normalization? Because that's the counter argument to the fact that China's trade is weakening. A lot of analysts are saying that, look, during the pandemic, they gained the lion's share of the of the trade market globally because of global trade, essentially, because of obviously the world being shut down. And so they're just giving some of that market share back. And to that extent, it's not a structural problem. It's just normalization, not weakness.
I think there's a couple of normalization arguments that are really worth highlighting, and you're exactly right. The first of which is on trade. We will see a normalization of trade on both sides of the ledger over the next couple of years. But I also think that applies to the growth narrative. 10 years ago, we all expected China to grow, 7, 8, 9%. As China's economy has matured, as it has evolved, it's no longer reasonable to expect those kind of growth rates. So expecting growth in the sort of 5% range, 4.5%, 5.5%, becomes the new normal. And I think we also need to think about what are the new sectors that are going to drive growth going forward, whether it's solar, electric vehicles, etc. So I think that normalization is very important.